Do you understand the mortgage interest tax deduction? NAR just put out a new consumer guide. And of course, this again refers um, to residential real estate. And so I thought we'd go over it just to kind of cover the basics of how that works. So here we go. NAR's consumer guide to the mortgage interest tax deduction. For many homeowners, the mortgage interest deduction can offer meaningful tax savings if you're navigating tax season or planning to buy a home. Understanding how this deduction works can help you make smarter financial decisions. Here is what you need to know. Number one, what is the mortgage interest deduction? The mortgage interest deduction allows you to subtract the interest paid on a qualifying home loan from your taxable income. This means you're taxed on a smaller amount, which can lower your overall tax bill. It's one of several financial advantages of owning a home, especially for those moving on from renting or weighing the cost and benefits of homeownership. Number two, who qualifies for this deduction? To claim this deduction, you must itemize your deductions on your tax return instead of taking the standard deduction. Your mortgage also has to meet IRS rules, typically be $750,000 or less, and be secured by a primary or secondary residence. Other factors like local property taxes, HOA fees, or home-related expenses can affect whether itemizing makes sense for your situation. What types of loans are eligible? The deduction applies to loans used to buy, build, or substantially improve a home. This includes first mortgages, refinances, and some home equity loans as long as the funds go toward significant renovations or upgrades. Even loans related to construction or land may qualify under specific conditions, especially with permits or active building plans. How much can I deduct? Your deduction depends on your loan size and how much interest you paid during the year. Figures you'll find on Form 1098 from your lender. It's smart to check this early, especially if you refinanced your mortgage, paid in lump sums, or had a late year closing. Understanding how this ties in with closing costs, insurance, and title fees can also help clarify your true home ownership cost. Does everyone benefit from this deduction? Unfortunately, not. Since the standard deduction was nearly doubled in 2018, more than 90% of tax filers have a higher standard deduction than if they itemized, and this includes many homeowners. If your mortgage or other deductible expenses are low, the standard deduction may save you more, particularly for first-time buyers with modest mortgage payments or homeowners who are close to paying off their loans. But itemizing often pays off for households with larger loans, higher property taxes, or charitable contributions. Your home's location and local tax rates can also influence the decision, so it's worth reviewing every year. Can I deduct mortgage interest on a second home? Yes, mortgage interest on a second home can qualify for the deduction as long as the loan meets the same requirements that apply to your primary residence. The combined total of your mortgage debt for both homes generally must stay within the $750,000 cap. You'll also need to itemize deductions and use the second home for personal purposes, not just as a rental. What happens to my deduction if I sell or refinance my home? If you sell your home, you can typically still deduct the mortgage interest paid up to the date of the sale. If you refinance, your ability to deduct interest depends upon how you use the new loan. Interest is still deductible if the refinance is used to substantially improve the home or pay off original mortgage debt. However, if you take cash out and use it for unrelated expenses, that portion of interest will not be deductible as mortgage interest. Review your new loan terms carefully and keep your Form 1098 from both lenders. How is the National Association of Realtors working to preserve the tax benefits of home ownership? NAR's advocacy team works tirelessly to advance public policies that build strong communities, protect property values or property interests, and promote a vibrant business environment, including the tax benefits of home ownership. For more on NAR's advocacy work, check out this link. And I will put this a link to this consumer guide in the description so that you can see this for yourself, and you can also see the other benefits and the other resources that this links to. Practices may vary based on state and local laws. Consult your real estate professional, tax professional, and/or an attorney for details about how state law where you are purchasing a home. And please visit facts.realtor for more information and resources. So again, this is really, I would say, entirely based on residential real estate. There might be, I think, and this is a question that off the top of my head, I don't know the answer to, but one exception might be if you are buying something, there are sometimes properties that are what we call live-work properties. And I think like there's a neighborhood here in Louisville, Norton Commons, and it is a planned development district. And so what that means is that they have it set up to kind of have a different mix of properties available. So it mixes together residential, commercial, in different ways that make sense for that neighborhood. And so with that, there are some properties in there, for example, that maybe have a retail or a hospitality function on the first floor, like a restaurant or something along those lines, or a store. And then on the upper levels, they have a living area. So they live above and then they work below. And so in that case, since you're living there, you probably qualify for some of that. I don't know that you would qualify for 100% of that. You would probably have to divide it in some way. But that is a question I'm not 100% sure of. So again, I will put a link to this consumer guide in the description. I'll also put a link to my website, davidmccoy.realtor, in the description. If you have questions, you can put them in the comments, or you can reach out to me through my website. I'll also leave an email in the description as well. And so I think that about wraps this up. I am David McCoy. My company is Otimo Properties. I'm a licensed real estate broker in Kentucky and in Indiana. I'm based here in Louisville, Kentucky. I do probably 95% of what I do is commercial. I also do a little bit of residential. and I do global. So if you need any help, have any questions, reach out to me. I would love to hear from you. And I think that wraps us up for today. Have a great day. Take care, everybody. Bye.